If you've seen the headlines recently, you'll probably have seen this one everywhere. The average UK house price has just passed £300,000 for the first time. Now, depending on who you ask about that, that's either proof that the housing market is booming again and things are going in the right direction, or it's confirmation that it's already absolutely completely broken beyond repair. So today I want to talk about what's actually going on with UK house prices and what it means for somebody like me who owns their home and owns a buy-to-let. For some quick context, I think it's really important. I bought my first house with my partner back in 2015, and then in 2018 we bought a buy-to-let property. So I've experienced the market from two angles, as somebody who lives in a house and also somebody who rents one out. And importantly, none of my properties is anywhere near that £300,000 average headline. My buy-to-let is worth roughly 140 to 150k, and my residential property is worth around 220 to 230k. And that alone should tell you how misleading those averages can be. So what's actually happened? Well, according to the latest data from Halifax, the average UK house price has now crossed £300,000. That sounds dramatic and it is a psychological milestone, but I think it's the detail that matters. Price growth has been modest, not one like big explosion. After a slowdown towards the end of 2025, prices have edged back up rather than surged, so it doesn't seem that this is like a housing frenzy, it's just more of a slowly grind higher. And this is where the headlines can really distort the reality that we all see. £300,000 is an average, it's not a typical house, it hides massive regional differences. It also hides the type of properties that people actually own. Most people I know don't live in £300,000 homes. I don't either. Both of my properties sit well below that level, and yet they've still followed the same broad trends over time. That's why I'm always cautious about reacting to a single national number. One of the biggest drivers of what's happening right now is actually mortgage interest rates. So rates have eased slightly recently with many deals I've seen at or below 4%, which does help demand at the margin, but they're still much higher than the ultra low rates people like myself got used to. Gone are the days of 1.7, 1.8%. And from my perspective, this matters far more than the headline prices. Higher rates affect what people can afford in the first place, whether landlords can make numbers work. For example, I am selling my buy-to-let, I'll cover that in a future video, and how much risk people are willing to take. House prices don't exist in isolation, they're tied directly to financing in general. So this is where my compounding project mindset comes in again, which is handy that this is the name of the channel, and you should definitely subscribe if you want to follow along my journey. Thanks very much for watching. Property for me has never been about quick wins, which is good because it hasn't been a quick win. It's been about somewhere to call home, first of all, and slowly let equity build up, paying down the debt as fast as possible, but realistically still quite slowly in the grand scheme of things, just letting time do the work. I didn't buy the house to live in 2015 like expecting constant price rises. I didn't buy the buy-to-let in 2018 assuming that every year would be great. I bought them with the hope that over a long enough period, property would quietly give me some more options later in life, much like investing in index funds. So what does this £300,000 headline actually mean for me? Honestly, not much. It doesn't change how much rent comes in. That number is currently zero. As I said, I'm selling the property, which I'll cover in some videos very soon. It doesn't change my mortgage payment this month, and it doesn't change my long-term plan. If anything, it just goes a step further to reinforce why I don't obsess around short-term price movements. Whether prices are up, flat, or slightly down, my focus has to stay the same. I want to manage risk, I want to stay disciplined, and I want to keep a long-term view, not a short-term view. So if you're seeing those housing headlines and wondering what to make of them, this is my takeaway. Big numbers make good headlines, they make you click on the article. They don't always change real life. For most normal homeowners and landlords, the biggest drivers are still interest rates, cash flow, and time in the market. I do know that this news might have had a different impact on first-time buyers, but I can't put myself in those shoes, so I'm not going to speak to that in this video. I'm just talking about how it affects me. I'm going to keep sharing how this plays out in my own situation on this channel, not just the theory, but the reality, because boring long-term thinking is kind of the whole point of this channel. Thanks for watching.